Good evening and welcome to the Business Day. I'm Vashan Brown. The government is being criticized for failing to update the national basket of goods used to measure the inflation rate. Speaking in a joint select committee meeting today on the Bank of Jamaica Amendment Act, opposition member Wickham McNeil argued that the inflation calculations may not be accurate. TVJ's Andrew Laidley reports.
By international standards, the national basket of goods should be updated every 10 years. Jamaica's last update of that basket was in 2005. It means the current basket is outdated by about 4 years. Opposition member Wickham McNeil now questioning the inflation figures.
There's a possibility that how you're measuring inflation is not capturing the real thing. You know, the basket today, I heard a man on the radio the other day talking about things like that may be included now, like weaves and tolls and things like that, which previously might not have been there.
Finance Minister Dr. Nigel Clark says although the basket is outdated, it is still reflective of the household goods being used by Jamaicans.
And what history has shown is that consumption patterns, as far as the basket is concerned, don't change radically. I mean, what you'll have is things like a phone card that wasn't in it in 2005, that will definitely be in it. So you're going to find that changes are likely to be on the margin, but there are updates that need to be made nonetheless.
Prime Minister Andrew Holness has made a call for Jamaicans to look more to the inflation rate instead of the exchange rate. But with an outdated inflation indicator, Opposition Senator Dr. Andre Horton is arguing that the exchange rate should not be ignored.
Now the exchange rate plays a factor whether you believe it or not, because firms will always index their price up. I just received a message with Tasty Patties saying that as of yesterday their prices have increased because of the exchange rate, and there are many other companies who do that.
The Statistical Institute of Jamaica Statin admitted that it was unable to update the basket of goods because of a lack of resources, but pledged to do so by April next year. Andrew Laidley, TVJ News.
Following ratings agency Fitch's warning that Digicel faces imminent refinancing risk and will likely have to restructure its 2021 bonds, the company posted a dip in earnings for the July to September quarter. According to the Irish Times newspaper, a slump in the value of currencies in some of its main markets against the US dollar offset an underlying improvement in revenues. Despite news of the dip in earnings, Digicel bonds edged slightly higher yesterday as investors took comfort from an improving business trend, with data revenues continuing to grow strongly, having overtaken flagging mobile voice revenues late last year. Sources said earnings before tax, interest, depreciation and amortization declined by 1% in the quarter to $250 million compared to the same period last year. While underlying revenues rose 4%, they fell 1% on a reported basis to $554 million, dragged down by a $26 million currency hit. This was mainly as a result of a weakening of the Haitian Guard against the US dollar, the currency in which Digicel reports financials and in which most of its $7 billion debt pile is denoted. However, Digicel's cash position declined to $180 million from $214 million earlier this year. Currency trading ended today with the US dollar selling for $137.04. The Canadian dollar closed at $103.24. The pound is going for $175.03, while the euro ended the day at $151.28. The JC Index lost 548 points today, while the Junior Market Index gained 29 points. Among the winners were Everything Fresh, Dolphin Cove, Paramount Trading, General Accident Insurance Company, Mayberry Investments. On the losing side were Epley Caribbean Property Fund, 138 Student Living, Siboney Group, Access Financial Services, and Jetcon Corporation. And that's the Business Day. I'm Vashan Brown. Good evening.